Welcome everybody on this exciting evening in hockey. If you're a hockey fan, I'm sure you're anxious for the game tonight. So it should be a fun couple weeks here in Alberta. If you don't know who I am, my name is Natasha Phipps and I am the team leader of Phipps Real Estate Group. I'm a real estate investor and investment specialist realtor, and joined here by most of the team tonight, who we're going to hear from a couple of them as well. But few great speakers tonight I'm excited to share with you guys. As always, we do record these, so if there's something you see or want to know more of, we will send out the recording. We always post it on the YouTube channel as well. I think we even have a handout today to give, so we will make sure everyone gets that, so no worries on that. And we will get started and kind of give you the overview of what to expect. So we like to do these every month. If you're new to these events, we do them every month as a bit of a update, a touch point, try to bring in a speaker depending on the topic, as well as just give you an update on kind of how we are seeing things as boots on the ground here in the Calgary real estate market. Our team produced over 100 million real estate sales last year. So we are right in the thick of it always. And this is what we love, is real estate investing. So if you have any questions through the evening, put them in the chat. Love to hear questions, want to hear what you think. I prefer engagement than not. I love seeing your faces as well. So please feel free to turn your camera on, and we will do best to answer your questions. This is what we'll kind of go through tonight. Oh, first of all, on the right here, if you're not in our Facebook group, Calgary Real Estate Investing, please go join us there. There's over 2,000 of us now in that group, and we do share this content in there, but it's a great place to ask questions and meet other investors that are interested in the Calgary marketplace. So please check that out. And there's our website there as well if you'd like to see more about our services in real estate sales or property management. So this evening, what we're going to be covering today is we're going to do just a quick market update like we always do. Alexandra Sell is going to kind of give us a lay of the land and what it's like out there right now. And then we are joined tonight by Ryan Bond, our trusted mortgage broker, who's going to give us that update, which I'm sure many of us are excited to hear, and what's going on in the mortgage world. And if you're looking to finance a property this year, what you need to know. And then we're going to talk to Una Allen as well, who is our full-time property management, talking about purchasing resale property for investment. It may have tenants, it may not, but what to think of as a investor when you're writing that offer, finding that deal from her perspective as a property manager. So I think that's really valuable, and we'll be excited to hear from her. And then to kind of summarize that, I'll just talk a little bit about some strategy considerations at the end of what you might want to consider given everything we've talked about tonight. And then we are going to do a Kahoot tonight for those who want to stay around and play a Kahoot game. And then we'll just do some networking questions at the end and hopefully get everyone out of here by the time the game starts. So that's the goal. So we're going to get started here. And Alex is going to give us her update first. So thanks for being here, Alex.
Thanks for having me. Hello, everyone. Last time that I talked was on the month of March, and it was all-time record sales. Following that, activity slowed down in April, but not by much. There were over 3,400 sales, which was still 6% higher than this time around last year. Our sales in all categories, they remain strong because of limited supply. New listings coming to the market are down relative to March. January to March was basically the craziest sellers market we have seen in a long time. But last month in April, the inventory was still high, low, just under 2 months. And then with the sales to new listing ratio, it's at about 74% for month of April, which means that the market continues to favor the seller, and also resulting in higher prices. Overall, average price for detached home in April reached $667,000. which is nearly 2% higher than last month, and it's 17% higher than last year. With the recent interest rates hikes, some of the other markets, Ontario, BC, they're definitely seeing a difference from what they're used to. Some of them have come to a standstill. And I had an investor client from out of town call me, and he asked, is your market crashing? And it made me chuckle, but it was a legitimate question. And so I named my next slide that question, because real estate will always be bought and sold regardless of the market. And I thought I would just put few really interesting reasons why.
Can we go to the next slide, Alex?
Yes, please.
Sorry. Okay.
So is the market crashing? Last year, 2021, 405,000 newcomers came to Canada. Another number that I thought was interesting when I was researching, 2.74 million is a number of people divorced. So not the happy statistics, but it does affect real estate needs. Also, another fun fact, baby boomers, they don't want to, sell their homes anymore. They are healthy and happy, and they love their lifestyle, and they want to live in their home. Oftentimes they will renovate and not to sell them. And a lot of them are actually holding this as a portfolio, as a legacy to pass on to their children and grandchildren. New housing starts in Canada fell by 2%, which is felt all across Canada. Rent is increasing in Calgary, and I think Una will talk about that, but in Calgary, last quarter saw anywhere from 6 to 16% increases. And the kids don't want to live in basements, suites or garages, so they're looking to purchase. And we're also seeing people buying vacation properties. So what that tells me is that real estate always fluctuates in terms of values, prices, activities, and there will always be a property that fits your need, no matter the market, even now with the interest rate rising, inflation, and all the other components. So super brief, market update, but that's what April has been like.
Awesome. Can you kind of talk briefly as well, like out there as a realtor right now? Obviously, you said that we're still in like seller's market conditions. Would you say it's a bit slower now compared to, March and where we were sitting then? Or what's the kind of climate out there for these buyers or investors right now?
So comparing to March felt very frantic, and it had a lot of people from out of town buying sight unseen. There was bidding wars everywhere. Right now, I would say there is still a lot of activity in detached homes under 600 within the first few days of coming to the market, especially if they show well and if they are priced well. I would say that's a key, because some of them are overpriced, and you can see right away, and the buyers can see as well based on the comparables. But so interestingly enough, I've seen a lot of sales and multiple offers in higher price points, like over $1 million. But I noticed that if houses have not sold within a week or two, they become more of a stale listing, and then they tend to sit, often price reduction or lower offer.
Yeah. Definitely, I agree. Things are sitting a little bit longer. Even like I was competing on one on Sunday, and there was 5 other offers on it, and which seemed like quite a bit, but the offer that was accepted was still conditional. It's not like it went straight to a firm sale with no conditions. So I'm kind of seeing that more deals are being accepted as a conditional offer than instead of kind of the madness that we had in February, March, where it's like you had to almost go unconditional to have a hope of securing something. Do you agree 100%. With that?
Yeah, you're right. Same thing happened to me. We lost on a higher end bidding war. Not much of a bidding war compared to March, because there were only 3 offers. But there were conditions as well on the winning offer. So we'll see where we land. But
Yeah, so that's good. That's what we want. We don't want to have to go unconditional.
Yeah.
And I think as summer approaches too, a lot of people are going to enjoy their summer this year. So could be a good opportunity to be shopping and taking advantage of that. So thanks so much, Alex. And if anyone has any questions, of course, put them in the chat. We can answer questions at the end for those of you that kind of want to explore further. And as always, if you want the actual like the stats that are released every month, we're happy to share those as well. Thank you, Alex.
Thanks.
Okay, next up is Ryan. Hi, Ryan.
Hey, Natasha, how are you?
I'm good. How are you?
Good. Thank you for having me on again.
Thanks for being here,
Thanks.
as always. Our mortgage guru, please give us the update and what we can expect. I don't know if you want to share anything, or do you want me just to leave this as is?
You know what? I have a few updates and just going to quickly talk about what to expect going forward, what we can do to plan, and a little bit about a newer product that's out there on the multi-units that I just want to touch on. So it'll be brief in 3 phases. Thank you, Phipps Group, for having me again. And nice to see some familiar faces out there, some of the clients that I've worked with in the past. I see you out there. Hello to you all. First thing that's on everybody's mind, Natasha, are rates. What is going on with rates? Well, they're going up, and they're going up fast. There's another meeting in a couple of weeks, expected to move the Bank of Canada rate up again. It just went up 50 basis points. And they're just, you know, as we all know, they're trying to cool the market down. They're trying to slow things up, right? And so where are we seeing rates right now? We're seeing the fixed is up around anywhere from 4.69 to 4.89, which is a huge jump compared to, gosh, 3, 4, 5 months ago.
Yeah.
It's significant. And the variable rate is sitting at anywhere from 2.8 to 3.05 right now, which is still very, very attractive. And so I'm, you know, I always get the question of what should I do, fixed, variable. And right now, you know, I had to take a step back and go, okay, if I could go back 3 to 5 years ago, what would I have chosen? Because I saw clients coming to me that were locked in fixed rates, and rates, as you know, dropped down to 2% or less. And what did they want to do? They wanted to get into them. They wanted to break their mortgage and get into these low fixed rates, right? But guess what? Who stops them? Bank does, when they say you've got a $15,000, $20,000, $25,000 penalty to break that mortgage. So I'm trying to teach my clients to learn from previous mistakes. We see rates going up, and oftentimes we get scared, right? What do you do? Well, I need to lock in. And that's the worst thing we can do. It's almost like when the market starts tanking, people want to sell their investments and get out of the market, right? So it has that same sort of mentality that goes along with it. And, you know, the difference between the fixed and the variable, I mean, we're almost 2% different. So why not go into that variable? Why not have that flexibility over the next 2 to 3 years? Reason being, and I hate throwing this word out, but they're already talking about recession, right? It's rumbling in the background. The stock market dropped 1,000 points today, the Dow Jones, right? So they're already talking about it. Whether it happens this year, next year, 3 years from now, it's a cycle, and it will inevitably happen. And if you want to prepare yourselves as an investor to take advantage of a recessionary period, one, you need to be in a variable rate so that you can break that mortgage and get out of it and possibly into a lower fix. Because as soon as the recession starts happening, guess what the government does? They start lowering rates, right? Yeah. So it is that cycle. It's so predictable. And that's what we're seeing right now. One of the things I was reading today, though, in a report that came out by CMHC that really kind of stood out is they said the biggest issue affecting housing affordability in Canada is that supply simply is not keeping pace with demand, period. And when I see that, you know, your team and the realtors out there, you know what's going on the market, right? Things are moving. You know, we just went through this whole multi-offer, you know, phase where, you know, we would have people come in wanting to go unconditional, and I don't like that word. Just so everybody knows, I don't like that word. You know, have we done it? Yes, but it's on very specific circumstances. but the supply is not keeping up, right? So we can expect, for this to keep going for a while. As I mentioned, Bank of Canada in 2 weeks is having another meeting. So I would expect that rates will go up again, whether it's 25 basis points to 50 basis points. But again, the difference between the fixed and the variable is 2%. So we have some wiggle room, right? If you go into the variable, it might take you a year to 2 years just to get where the fixed rate is right now. So can you afford to do that so that you can have the flexibility to do what you want if the market changes? I think that's worth it. Keep in mind, with a variable, you can lock in at any time. So if you really get cold feet, it's a phone call to the bank and saying, hey, I want to lock this in for 5 years, and they'll do it on the spot for you, no problem. Going back to my wish list that I could go 3 to 5 years back. Again, I always tell people 30-year amortizations. You want to look good on paper. You don't want it up in your head that you want to pay off your mortgage fast. You want to look good on paper so that you can continue to buy properties. That's what we're all here for, is the ability to keep buying properties. So 30-year amortization keeps your payments low and looks good on paper for you when you go to apply for that next mortgage. Did you capitalize on price? When do you want an appraisal done on your property? Do you want it when things are starting to turn south or when things are going up? Obviously, when things are going up. And if you set it up correctly, that means you've got that readvanceable line of credit on it. You've expanded that. You've taken advantage of whatever equity you have in there in the good times, so that when things change or start slowing down, you're ready to jump on those opportunities that come up in the marketplace. So 30-year AM, readvanceable line of credit, variable rates, and those are the things that I'm telling people to set up for the next 2 to 3, 4 years, and just get ready and have your foundation laid, have it in place so that you can be a successful investor. So that's just kind of a little market update on what I'm seeing. Again, we were seeing the multiple offers, and that was a lot of work seeing those come through, and the short time frames we were getting offers that you had to be done in 5 days. Well, if we need an appraisal right now, we're booking out an appraisal a week, so it gets pretty tricky to be able to do. So, but that is changing a little bit. Just for our multi-unit investors out there, I'm just going to briefly touch on this. There's a lot to go through, and I don't want to take up everybody's time tonight. But if you wanted more information on this, please just contact me, and I can send you some info, or brochure, or what have you, or just talk it through. So there is a newer program out there for multi-unit investment, and it's called the MLI Select, and it is a CMHC program. This one's a little bit different than the previous one. If you are familiar with it, the previous one, you could go in at 85% loan to value. You can get that 4-year amortization. Usually at about a 4 to 5% fee, which kind of stopped a lot of people, especially if you're up over $1 million, right? We're talking $50,000 premium or higher to use this program. Sometimes it makes sense, sometimes it didn't. Some lenders have come out with this newer program, and they're using it. And it's based on 3 sort of criteria. One is affordability. The second is energy efficiency. And the third one is accessibility. And what they're doing with these, they're trying to promote, scaling flexibility to encourage preservation, creation of affordable, accessible, climate compatible units. And so what they do is each category is scaled by points. And depending on what you're doing, whether it's new construction or just purchasing an existing building and doing some upgrades to it, there's a lot of perks that can come with that. And the bonuses come out in terms of you can get up to a 50-year amortization on these. You can do up to 95% loan to value on these. And the last one is they're discounting their premium quite drastically. Now, I know a lot of questions are going to come up and say, well, what's the criteria exactly? They look at a property case by case basis. They score it based on what you want to do with it, the energy efficiency of it, and they will basically present an offer to you. And they'll come back and say, okay, we'll do this amortization 45 years. Your premium's going to be 1%, and it's a 95% loan to value, or it's a 90% loan to value. What I like about this program is now you have some options on the table that you're not so restricted to their old program. And this is again is for new construction, existing buildings. If you wanted to refinance a building, you can do that as well. And the other nice thing is now that we're sort of out of the COVID timeframe, the CMHC is somewhat caught up. Before they were 3 or 4 months behind. Now they're 6 to 8 weeks. We can get an approval done, and they're also supplying the bridge loan as well, so that we can get the approval a little quicker, and then still rely on the CMHC financing as the end result for taking over the property. So that's a pretty cool product that's just coming out there. And again, if you're interested in learning more about the multi-unit, I'd be happy to chat with anybody that's on the call. Questions?
Awesome.
Yeah.
Ryan, what would you say to or add anything about people who are sitting, with a pre-construction deal that's maybe like closing in the next 12 months? Obviously, that's very challenging, and I'm sure you get lots of questions about that, but I thought that might be just a nice little point to add. It's not just about Calgary, that's period, anywhere. Mm-hmm. What advice, would you give them from the mortgage broker standpoint that we can do to try to set them up as best as possible?
A couple of points on that. One, I'm going back to a lot of my new builds, and if they are still 10 to 12 months out, which a lot of builders are behind quite a bit, first off, let's get a rate hold in place. I want to get, at least a 12-month rate hold in place and ready for you. You don't have to take it, but at least that's your insurance policy against rising rates, right? If rates are still low, then yeah, we obviously will take the lower rate. The second one is a newer program, and it's a company that Mortgageline here is one of few brokerages throughout Alberta that has access to it, but it's through a more of a private lender. And what they're doing is they're allowing you to close on your new build at the current market value. Instead of what you purchased it for, which is standard, and most lenders will go off the purchase agreement, this lender will let you close on it at what the market value is. And why is that important? Well, you want to get as much out of this property as you can, right? So if it has gone up significantly and now there's equity sitting in it, then it could be that you may not have to put any more money down on it because it's already built into the property. So if you've already put some down 10%, 15%, and now it's gone up $100,000, well, there's your equity. But traditionally, lenders want to go up the purchase price and the contract and everything else. They won't let you tap into that. This lender will. They'll close on it. They'll let you have the higher amount based off appraisal, and then you can take it out after. And the rates are really not that different. When we look at our lenders up around 5%, I mean, the alternative lenders have not changed that much. They're not at 6%. They're still at 5-ish.
Yeah.
So that's a cool product that we've been just starting to get to know.
That's substantial. I mean, I know in our group, we've got plenty of people closing this fall that are projected, hopefully this fall, that have made that kind of money and that have that sitting there. So that would allow them to access that right away or have remaining cash for something else that they want to get into. So that is very cool. Yeah, that's great.
Yeah.
That's great.
And you know what? I'll get some more information. It's a newer lender. They've been around. They're part of one of the big banks. But they just presented it to us probably about 2 weeks ago. And like I mentioned, we're one of the only brokerages in Alberta that has access to it. So we could put on a little luncheon or something like that and go over that and discuss that in more detail.
Yeah, that might absolutely be worth it. Very cool. And that's something that would that only apply to properties in Alberta?
You know what? They are national. So yeah, I'm sure we could look at properties outside of Alberta as well.
Cool. Okay.
I
don't know if my internet is lagging. Can you guys hear me okay?
Yeah, I can.
Okay.
So So there are
Yes,
a couple
okay.
questions there. What are the rate hikes on the lender? You know what, they're very competitive. And you know what, this is, when we do something like this, it's usually just, it's a stepping stone. And it could be for 3 months, 6 months, maybe a year. But they're not that much higher than what the rates are right now. I'm going to say 50 basis points to 75 basis points, if that. When you say multi-unit, how many? 5+ for multi-unit. So anything 5+ would be considered for that. So we have seen, you know, some of the townhouses, the 3-plex with the suited units in it would be considered 6 units.
Okay.
Any other questions for me?
Any questions, guys? Oh, Sal and Emily, we can address that at the end. Maybe we'll talk a bit of strategy at the end of benefits of looking at Alberta, Calgary. That's a good question. Gary said, well, he was asking about the current CMHC process time for multi-residential.
You know what, Gary, I just spoke to somebody on Monday and they said CMHC is relatively caught up and that it would be approximately 4 to 6 weeks, or sorry, 6 to 8 weeks is what they're kind of looking at. Could be sooner, but they kind of, that's their long-term approach.
Yeah, Gary, I would say, like, I think that's what we were saying last year. Hey, Ryan, like 6 months, it was like long.
Oh, yeah.
So maybe this particular agent just isn't up to date on the current timelines. Well, that's too bad if that's what killed the deal, but you can always get a bridge loan.
And a lot of lenders will do that bridge loan internally.
Yeah.
You know, they've learned from it, they've gotten better, and they're providing it there for people, right? Internal. Before we had to go private, right? And then switch it from the private to the other A lender. Whereas now they've got that all built in internally.
Perfect. Drea just put Ryan's info in the chat there as well, his phone number and email. He is our go-to for everything here at our group. So definitely reach out to Ryan with any of your mortgage questions. And oh, Michael said, oh, are there many 5 and ups available now? In the resale market? Yes, definitely. For new construction, more definitely challenging. There's a couple people starting to build these. I have actually one contact. Is he here? I invited him. I'm not sure if he could make it. He's building these like inner city type of 6-plexes to essentially take advantage of exactly what Ryan just talked about. You need 5 and more units. Something that is newer is ideal for the energy efficiency requirements. So if you are interested in that, reach out to me and I can let you know. I actually just had a call with him this week. So there is some opportunities starting to pop up. The big, larger scale builders aren't doing, you know, like they keep them internally. If they are building them, they're not necessarily going out to the market. So you kind of got to either make it yourself or get in with some of these more medium-sized builders that are taking these land developments, land assemblies, inner city to be able to put more units on them. So if you're interested in that, let me know. Deanna asked Ryan, are there any grants associated with these investments? Or I'm not sure what you're talking about there, Deanna. Are you talking about the commercial, like the MLI Select program, like grants to bring them up to energy efficiency or affordability? I assume that's what she's meaning. I don't believe there's grants associated with that, is there, Ryan? Not that I'm aware of. The 50-year amortization is your grant, I guess.
Yeah.
Yeah, that's a big deal. Okay, well, we will move on to talk about purchasing resale property with Una, and I'm going to just pull up the slides again here. So thanks so much for being here, Ryan. Are you able to stick till the end if you have in case people have a couple more questions, or do you got to run?
Yeah, I'm gonna be here. So yeah, go. I actually want to listen to everything else too. So perfect. Thank you.
Awesome. Okay. Thanks, Ryan. Okay. I'm just going to share my screen again. Share. Okay, Una, you here?
Hi,
Hi, Una.
you hear me well?
I can hear you good. So for those of you who don't know Una, Una is our full-time property manager here at Phipps Real Estate Group. And she's going to talk to us this evening about purchasing a property, not just with tenants, but as an investment property, and some things you might want to consider from her perspective as a full-time property manager. She is a licensed realtor as well, but property management is the name of her game. So thanks so much for chatting with us, Una.
Right. Thank you for having me. All right, so I guess I wanted to say that a lot of times when I receive a property into my portfolio over the years, not so much working with this group, but in general, over the years, you receive a property and there's so many things that could have been done in favor of the new owner prior to taking possession to put them in a more favorable position for that tenancy or for that, or just in a better position if they were taking over somebody with a tenant. One of the first things to start off with is the desirable possession dates that you might want to have. People are always like, which part of the month is best to close? I would say 1 week before the end of the month is probably best. And the reason for that is because most organized tenants, the ones that you really want, they're probably going to be looking for a home at the end of the month. In Alberta, we have a 3-day notice requirement versus some other provinces. So here, like the most organized tenant will start looking for a property that week before they need to give a notice, sort of, if not even prior. But that's kind of a good time for them to start looking. And then hoping to find something, and then if they found something, they're going to give that 30-day notice at the beginning of the month. So for you to catch that person, the more organized tenant, so that you can possibly have them for the first of the next month or for the middle of the next month, or some dates in between, you kind of want to focus hopefully on taking possession at the end of the month before, if that makes sense. Okay. Yeah, okay, cool. So some of the desirable terms that you might want to have in your purchase agreement, in order to line everything up so that your vacancy rate or your vacancy time is really short from the time of possession to the time you get a tenant in, there are some terms that you can hopefully pack into the deal, depending on what situation you're in, if you're in a multiple offer or not, who are you up against, how long the property's been on the market, what kind of property is. I mean, you have to play by ear. You have to talk to your agent to really feel it out, what you can really propose and what's going to put somebody off and not want to talk to you. Like, you'd really got to work, you got to, but if you got to decide what you may or what you may not want to apply. So one of the helpful terms, the first one would be for the buyer or the property manager to be allowed to use the professional listing photos from the MLS ad for the purpose of marketing the property for rent. So a lot of times, sometimes the property is given to me and there's these beautiful photos on MLS of the property that's still even vacant, let's say. And I'd love to be able to use them instead of dipping into the budget of the new owner that's coming into my portfolio, to get the same thing done again. And it's kind of great because when the seller is excited to sell the property to you, and you kind of put it as a term, they kind of ask their listing agent if it's okay. The listing agent probably finds it hard to say no at that point. So they're like, sure, whatever. So that's really good. Usually during that time is best, because what I find is going after to the listing agent, they'll always say no. They'll want to charge us for it. It happens often, more often than you would think, that they would just say no. So the best way to do it is to put it into the term of your purchase contract. Another term you'd like to put in is, after this deal goes firm and before completion day, seller to allow buyer's property manager to enter up to some number of times for showing to potential future tenants and or for holding of open houses for the purpose of renting. So now you've bought enough time from the time that you closed or went firm to the time that to this 1 week prior, that you might even be able to get somebody in on that first, if everything works out well for you, and it should. If you're doing everything according to the market conditions and pricing yourself right and marketing yourself properly. So another one is seller to allow a 24-hour walkthrough prior to completion day. This is very common. We see it a lot, but you want to have this in because of the next things that come in. So I'm going to go over those next things. So before you rent the property out to a tenant, to make it attractive for showings and to have the best tenant come in to attract the best tenant, the property, you want it to look clean and attractive and showable. And so if you can ask for a professional clean with receipts provided 24 hours prior to completion day, including carpet cleaning, super important. Hopefully cleaning behind and inside and outside kitchen appliances. That's super common to see that the oven is still dirty. Super common to see microwaves left dirty too. Like at some point, somebody's going to have to pay for this clean before the tenants come in. Somebody's going to pay for it. So it's best if there's a way to pack it into the purchase agreement somehow, it'd be best. And then, inside and outside of kitchen cupboards or a whole, let's say $1,000 or something will be applied until this is done. And if not finished within the 2 weeks of after possession date or a week, whatever you set, don't hold back to be released to the buyer. Another common thing that I find in in properties that I take over is that past tenants, especially from these properties that were already investment properties, tenants will leave a lot of stuff behind in the shed, under the patio if there's a place to, and all these nooks and crannies full of old tires and old buckets and paint buckets and just stuff that is definitely not going to be useful to your next tenant. And so that is stuff that somebody's going to have to pay for landfill haul, to be done. So something like that is you want to make sure that that stuff is announced in the terms loudly, and some $300 holdback for that. Again, if it's not done, that it needs to be released to the buyer. And then there's another one. This is not very common. It doesn't happen very common. This would not really apply if you're buying a condominium, and more a house and more like an older home with a tree in the front or some bushes because of the tree roots or something. But it does happen where a tenant, you would place new tenant, you got your new tenants in there, and suddenly you have this huge plumbing bill come in because the pipes haven't been cleaned in a long time, the sewer pipes. So there's that too. As you know, on a purchase end, a lot of times people pack into the home inspection the sewer scope. That's a common thing. It's become more common now in Calgary than 5 years ago. Now it's almost everybody's doing it, especially on older properties. And so they're not only doing it for the blocking of the pipes from tree roots, they're more looking for bigger damage to the pipe, which would cost like $10,000 to repair, like a broken sewage pipe or something. But if you're going to do it anyways, look for this kind of stuff and write something in, like if a blockage is found in the pipe, example, tree roots or something like that, the seller will pay for the unblocking. So the buyer will pay for the sewer pipe inspection as part of the home inspection. But if a blockage is found, the seller will pay for the unblocking of the pipes. Again, provide receipts, same sort of thing. Regarding holdbacks and releases and things like that. So those are some really useful terms. There's definitely more stuff that I can add. For example, some homes had pets inside of them, and some future tenants of yours are going to want to have pets. And lots of times we permit tenants with pets. And would be really nice for these tenants to sign the type of lease that we sign with them, where there's an addendum, a pet addendum, where it clearly states that they're going to clean the ducts after, they're going to clean the carpets after. For us to be able to request something like this off of them in the first place, it would probably be really nice to show that it was done before they came in, so that they're not the only ones on the line to do this because they have a pet. So in any case, it's very good no matter what. A lot of times people do some construction. I find that often these ducts filled with drywall dust, drywall pieces. So it would be really helpful for the longevity of your furnace, as well as the cleanliness and the breathing air in the home, as well as this courtesy to show the tenant that it's been done before they came in. But especially to request that of tenants that have pets, if we're going to be charging these pet fees on top, and so we then expect the same from them. So that's really good. If we can have the ducts, the dryer vents, and furnace professionally cleaned and provide receipts 24 hours prior to completion, or a holdback of $350 will be applied. It's really not much to do this. It's about $160 to $350, depending on the size of the house, to do this. It's not really expensive. Another thing that I find commonly in a lot of properties, that, everybody will write these unattached goods, and it'll be stove, microwave, all this stuff, and it'll say 2 remotes for the garage, but nobody ever puts in the community mailbox key. Like, it's not very common to remember that, but it happens more often than you think, that we don't get the property with the community mailbox key. And so there's always a charge, whether it's a rekeying, whether it's getting just another set of keys for the old box. There's still that little bit of a cost, whether it's $150 or it's $50 for issuing of a key. Somebody's going to have to absorb it. So that's just something nice to kind of not forget and put it on. Fobs. I find often fobs into buildings and condominium buildings that I would have to go back to the owner and say, hey, we need another fob. We need a couple of more fobs. One for us, one for us, one for 2 for the tenants, which is 3 in total. And oftentimes you would be surprised, sellers have 3. They never give one up. Like, they just sell the property with the 2, and they end up. I'm one of the guilty ones. Like, I sold my property. I still have a fob at home, but if I was asked for it in the contract, I probably would have just given it away with it, and it would have been a 3rd fob. And that's a $75 to a $350, depending what it's for, charge to the owner. So that's really something cool to remember. Maybe request and see if there's an option to get as many as you can.
For sure.
Yeah. And then there's like
quite pricey. Like, some of the buildings are quite pricey to get the fob.
Replaced, or be $350.
Yeah,
ridiculous.
That's a good point.
And like a regular door fob could be $75.
Right.
Yeah.
Yeah.
Yeah. And then there's tiny little things like shower curtain rods, and I mean, it depends which market we're in. Like, in this market, it's hard to ask for an extra shower curtain rod or an extra light bulb.
Yeah.
But these are things that just cost, and maybe you just might want to think about that, in our leases, and to protect your home, these tenants will sign that they must use shower curtains and that they must protect your bathroom. So for you to be able to give them the opportunity of being able to fulfill that, you want to give them a shower rod. But I find things like that, the little things that add up as maintenance items that somebody has to go and install later at $75 an hour, and right. So all those things add up.
For sure. Well, and if you're in a market condition where you can't get everything you want, like we talked about here, then you need to plan for that in your closing costs and your budget, to to be able to provide the property in the condition that you would want to provide to your tenants. So all really good things to think about. Do you want to talk briefly, Una, about the rental market right now? I know we didn't prepare that, so I'm kind of putting you on the spot.
The
But
rental market has not changed at all since
from last time.
maybe the market has changed a little bit on the sales end where properties are starting to sit a little bit. But for us, no, people are still being pushed out. And we're still feeling it as, you know, at least in our portfolio. And we're still feeling it. I just had a detached house. Mind you, I'll tell you exactly what happened. This will give you an idea between people with pets and no pets. And I'll tell you the difference in the number of applications that I got. So a detached house, $2,300, unfinished basement, 3 bedrooms plus bonus room upstairs, 2.5 bathrooms, granite, hardwood floors downstairs on the main level, $2,300. I did an open house. I had 27 applications. 1 hour of an open house, 27 applications. In the end, funnily enough, all of the applications had bigger animals on them. The bigger animals that are hard to get anywhere else into a 2-bedroom townhouse condo, whatever is condominiumized. So we saw a lot of that. And then this was you know, we were trying to see maybe we'll get like a really great application. And the pets thing was a big deal to the owner. They really were hoping that if they had to accept a pet, that it's maybe just going to be one, and it's maybe just going to be a small something. So then really we actually had to repeat that open house after 27 applications. We had to repeat it. And but what I can tell you, something interesting, actually, maybe really important actually, is that out of those 27 applications, a lot of people probably wouldn't have qualified for that home, actually. So I guess what we're seeing then is that we're starting to see, you know, there's that mix, this influx of applications of these people, of this demand, but in the end, there's a handful that will qualify at these prices, you know, and especially for that detached home. Anyways, I repeated the open house, and it was for pets that are under 20 pounds and 1 pet only. And we repeated the whole thing, and we only had 8 applications, and then, or 9, and then 3 were under some serious consideration, but really one of them was like the top notch on the financial qualifying. So it tells you regarding something regarding pets that you'll probably have a lot bigger choice.
Yeah.
A lot bigger choice of the type of tenant for sure.
Everyone got a COVID.
Yeah, application. Yeah, everybody got one. Yeah, absolutely. Or 3.
Or 3. Or
Yeah.
a whole family of puppies. Yeah, exactly. Okay, awesome. Well, that's super helpful. I don't know if anyone has any questions for Una about anything she covered. I think those are all really good points to consider. Again, obviously you need to be, you know, cognizant of what the market condition is when you're putting in your offer. Speak to your realtor about what would be reasonable for this specific property. But all things you need to think about regardless. And so just, you know, may as well start thinking about it sooner rather than later. If you are interested in our property management services, Una, why don't you put the PM email in the chat there and your phone number in case people do want to have a private conversation with you about any of their property management needs. And then we will move on. We are like right on track today. I'm very impressed with us. Okay, so to kind of wrap up the presentation part, I was going to talk a little bit about kind of strategy and everything that we talked about in terms of Calgary and what you need to be thinking about. as Alex said, things are changing out there for sure. I have certain buyers right now who are only looking at listings once they've reached a certain amount of days on market, because they're not interested in competing. So that's one way you can get around if you're just not interested in competing, because that is certainly still happening, but there is things that are sitting, and there is opportunities out there. Things are sitting because people aren't taking necessarily a good enough look at something. Or for example, the rents on the property currently are too low, but you could ask for a vacant possession if it's a month-to-month lease, 90-day possession vacant, and improve those numbers. So if you just look at the numbers as it is and don't do any research and take it for face value, you could be missing a great opportunity, because you might be able to do a lot better than what they're doing. So I've seen several things come and go, not sold, that being the scenario. So you can keep that in mind. In terms of, if you want something newer, what we're seeing now happen too is people who purchased, new construction in the last 5 years, who are now moving on to something bigger, and they're upgrading in the market or retiring or exiting or whatever. And so if you want something newer, we're starting to see these trickle back to us. Things that we, maybe sold 2 to 5 years ago are coming back to our circles now. And so yesterday we just signed, we'll have four legally suited half duplexes. So 4 titles, 8 tenants that we're going to be selling off market with our group. And so again, it's just asking around, what do people have? What's in their pocket? So if you're looking for something, or that particular deal interests you, I'm really excited to have those, because the current wait for new construction is, we're looking at, several years, and it's very hard to run your numbers with that timeline, or you want to get your money to work quicker. So that's something to look at. In terms of multifamily, I'm really glad Ryan talked about that. I think we're in a really great time in the Calgary real estate cycle and marketplace to look at multifamily. So the fact that these products are available is amazing. Now, a lot of what's out there is, older, not going to qualify necessarily, but there is some new stuff coming up, or you can renovate it, like Ryan said, improve the building and come up with that really great financing plan. But what I would say for a multifamily right now is, the reason it's interesting again is because of just what the Calgary marketplace is doing. We're seeing so much more economic activity downtown. We've seen positive appreciation now in downtown condominiums, which we're not necessarily talking about buying condominiums, but the fact that those tables are starting to turn, we haven't seen that, since 2015, aside from the last 6 months. We're starting to see green on these things again, which is a much preferred color to see. So things are actively appreciating. Vacancy has come down significantly. And if you're in any sort of rental groups in Calgary, you're seeing people are looking for places to live. So the multifamily game right now is, I think, a really great place to be looking. And a lot of, I don't want to say, well, I will say it, less maybe strategic investors are still kind of looking in the suburbs, which there's nothing wrong with the suburbs, but we've seen so much appreciation and lift in the suburbs that if we can try to get ahead of that appreciation and lift, and kind of look into inner city and downtown, while there's been a lot of excitement in the suburbs in the last 6 months here, I think there could be some really great opportunities. You can absolutely apply the BRRRR strategy on many of these buildings. Inner city, they're underperforming. They have been, just kind of doing their best with them for however many years, and they need someone to come along and improve them, raise the rents, put some, work into them, get better tenants and higher rents, and kind of flip them over. So lots of opportunity there. If you're interested in the commercial space, we can help you with that. Here I am commercially licensed too, so I can't dive much more deeper than that, but I do think the time is absolutely right. And the last several years I've been saying, wait, we're not quite there yet. I think we're there yet. I think we're there now. The other thing that I think we're there now for is infills, land assemblies, any of that inner city stuff that was kind of a little bit risky in the last 5 years, like I said, now is the time to be looking at that again. So if that's something you're interested in, I think it's a really good time to be exploring that, that as well. So yeah, exciting times indeed for Calgary. Any questions? I just saw a few things in the chat. Sorry. Or did you grab it, Una? Oh yeah. Vacant possession. Yes, that really good question, Laura. Laura asked, can you ask for vacant possession in Alberta if you're not moving into the property? Because I believe in Ontario, you have to actually move into it to request that. So that's a good question. That is definitely a difference of Alberta. And maybe I will address that question quickly before we play our Kahoot game that was earlier about the benefits to Alberta. And why so many people are looking at Alberta. I know we have some new faces here today. So obviously, if you've heard me speak, I'm going to be repeating myself here. But Alberta itself, number one for a lot of investors looking outside of Alberta. Yes, same thing with BC, Laura. You're right. Is first of all, price point and affordability. For us Calgarians, we're starting to see things seem more expensive, obviously, and that rising costs. From outside of Calgary, it still seems very affordable here, and it is still very affordable here in comparison. And so we're seeing people, pick up and move purely because Alberta has higher wages and a more affordable lifestyle. So you can get paid more and have less expenses. That's a great recipe for someone to get started in life. And combining that with all of the really exciting opportunities Calgary has to offer right now, it is attracting a lot of people. I know, Una, you had mentioned that you kind of were thinking on some of our properties, we were seeing like 30-40% of applications were from out of province, like a significant amount, right?
Yeah, absolutely. It happens all the time.
Yeah,
absolutely. 30 to 40%. Yeah, 30%.
For sure. So that tells us what we need to know. That's the people moving here is what's going to drive the economics. And they are what we need. So that's why rental rates are going up for sure. So that affordability, number one, less taxes here, no land transfer tax. The landlord tenancy laws are a massive thing. If you've been a landlord in British Columbia or Ontario, you know what I'm talking about. There's a very substantial difference of difficulty for a few things. Number one, we don't have rent control. You can raise your rent once per year, but there's no amount like limit that you can, be stuck raising it to. So that is a huge advantage in a shifting market, of course. And the ability to evict here, the process is much quicker. I don't have time to go into all of that, but it's a lot easier and more effective. You hear many stories of landlords in other provinces, stuck 12-18 months with tenants not paying rent. And that's completely unacceptable and puts your entire investment at risk. So that is a huge benefit. So cash flow, affordability, laws, and taxation, all of those combined with just the exciting economic stimulation in our marketplace is what's really driving the investment here from a residential investor to large scale commercial investment as well. So it's a very exciting time here in Calgary. But I hope that answers your question. We can obviously, if you want to ask me a few more questions about that at the end, we can do that as well. I am, Drea, can you put my email in the chat as well? If you are interested in those off-market opportunities I mentioned, you guys are the first to hear about them, the people who are here at this group. So maybe I'll give you guys a first crack at that. I will send it out to the email list and put it in the group as well, but those won't last long. They're very hard to come by right now. Oh, awesome, Drea. Drea also put in some other kind of summary benefits to looking at Calgary. If you are from outside of Calgary and you want more like details and data and what's going on here, go to the Calgary Economic Development website. They will give you all of the statistics you need for all of the economic indicators to assess where's our marketplace at and why and who is looking at Calgary right now. So I think that is a really great resource if you're from outside Calgary and you're trying to figure out, okay, what the heck is going on here? I would suggest starting there.